Hi, Matt McAleer, President, Director of Private Wealth, Cumberland Advisors, February 9th, Super Bowl weekend. That should be a great game. In terms of markets, markets are a puzzle. We know that. Just as we were starting to get concerned about breadth and even advancing stocks versus declining stocks, and by the way, that's still a little bit of a headache. But just as it was starting to become a concern, we saw small and mid-cap stocks rally the back half of this week. Now, is that just a reversion to the mean rally? Keep in mind, NASDAQ up sharply year-to-date, S&P up over 5% year-to-date. We came into the week with small and mid-caps down slightly for the year. So there was some ability just to get a bid in terms of, responding to that large cap rally. What we'd like to see and what we do see next week can be two different things. We'd like to see a continuation in small and mid. It would give us that confidence that capital could be allocated in multiple areas of the equity market. As much as you can like tech and as much as you can respect what's going on with AI and the semiconductor sector and the software sector, of which we have some names acting very well, there comes a point where you get a bit concerned about valuation. And if there's other areas of the market picking up that lag, picking up that ball, we'd be much more confident in overall equity allocation. I mentioned last week, maybe getting to a point in our tactical strategy, for example, where hedging a little bit makes sense. Haven't done it yet. We'll continue to watch from a trend and relative strength standpoint. International, solid week. You did have China in terms of the Shanghai and Hong Kong bounce a little bit this week. Remember, we discussed 2 weeks ago the real vicious beating China's taken in terms of equity performance. So again, similar to small cap, a bounce is natural. We got that bounce. Is it able to continue and help out the rest of Asia, or does it start to drip? Remember, the emerging markets are only going to go as far as China goes. So, a lot of moving parts. The puzzle keeps being turned in multiple directions. We'll try to keep in front of some of these changes, make reasonable decisions. In terms of action in the portfolios this week, took a little bit off of the value holdings in U.S. core, and then in U.S. equity ETF, David bought the banks, felt the banks were offering some value off the recent pullback. Thanks for joining us. Now we're going to toss it over to our CEO and Director of Fixed Income, John Mousseau, who filmed earlier today.
Thanks, Matt. This week in bonds, drift up in yields. Not on a lot of economic news at all. Really on a follow through from last week where we saw a strong jobs number on Friday and we saw Jay Powell out in front saying we're going to keep short-term interest rates high, not necessarily for longer, but what he's trying to do is disavow the market of thinking, hey, you're going to see a lot of rate cuts and you're going to see them soon. And that's his way of saying, let us decide, not you guys decide, and we will watch the inflation numbers, by the way, of which we get two important numbers next week, both the CPI and the PPI. So if you looked at the 10-year Treasury, it drifted up about 15 basis points this week to a 419. The 2-year Treasury note drifted up about 10. It's at a 449. Municipal bond yields similar this week, although from the beginning of the month, it has been very good outperformance by Munis, even in spite of a large supply. They have been gobbled up. And it really tells you that the tone of the muni market is so different than it was last fall when there was this fear out there and we saw dealers just unloading bonds at very cheap levels because they were scared to death because of a treasury market backing off. It is a totally different tone right now. and deals are getting done, and they're getting done fast. They're not having to cheapen deals. They're just getting done. And we look at this a lot, and we look at those ratios of muni yields to treasury yields, particularly on the short end, where they have been low and they've been going lower. What does that tell you? That tells you there is a lot of money that piles in to the short-term muni market. And we think part of that is it happens during election years, and that people are kind of hedging their bets in the sense saying, hey, I don't care whether the ratios are almost non-economic. I just want to have money in the muni market short term and keep that flexibility, because if the election comes and there's a change, could be in Congress, could be in the White House, could be both sections of Congress, who knows, that I might be facing a change in tax policy. And that's how they keep everything safe. We hope everybody enjoys the Super Bowl this weekend. One of the Moose rules is never be alone at Thanksgiving or on Super Bowl Sunday. So if you know somebody out there who's alone, invite them over. If you're alone, invite yourself over to someone else. But it's always a grand day. I'm wearing red today. That could be the 49ers or the Chiefs. All we're looking for is a very good game. And I've been lucky enough to see all 58 Super Bowls, counting this one. So enjoy the game, everybody.
Thanks, Moose. Great info. Enjoy the game. We'll see you next weekend.